Senators, though, say they still plan to move forward, even as divisions between Democrats, Republicans, and the crypto industry, as well as banks, remain unresolved. Peter Chung is the head of research at Presto Research, joining us live right here in our Hong Kong studio. Peter, Happy New Year.
Happy New Year.
So I will use that again. Do we have more clarity around the crypto industry and where it's headed in 2026? I mean, do you agree with what Brian Armstrong had to say, that it seems to be that the sticking point right now is about the yield-bearing, yield-making, stablecoin related issue? Explain what that is in plain English.
Yes. So if you recall the Genius Act, which is a stablecoin bill that passed last year, it bans the stablecoin issuer from sharing the yield with the users, but it doesn't ban stablecoin issuers from passing the yield that they generate to the stablecoin distributors and share with anyone who deposit stablecoin at the platform, such as Coinbase, that distributes stablecoins. If there's no bill, that basically means that users will continue to enjoy those rewards that the Coinbase shares with their users. Now, I think what the banking lobby was trying to do with this Clarity Act is to insert a clause that basically bans even that, banning the likes of a Coinbase and other types of stablecoin deposit takers from sharing the rewards with their users. And Brian Armstrong is basically saying that that's not good for the consumers.
Yeah, so in simple terms, it's really banks that are looking for some sort of a protection at this point in time from the crypto competition. In the bigger picture, what does that tell you?
In the bigger picture, what that tells you is that the banks probably feel threatened by the changes that are brought about by the advancement of a crypto industry, and they are doing everything they can within their power to protect their moat. So I think consumers have to decide eventually. They are the users of the service, and they have the power to influence this through the lawmaking process, and just maybe recognize that which one is better for them. Whether banks continuing to pay very almost nothing on their deposits by keeping those moats from the competition from the crypto industries, or allow this type of service to the customers, so that the banks themselves can push themselves to maybe become more competitive. And instead of giving you 0% interest on the deposit, then maybe they should improve their service and pay higher yield for the depositors.
And if you ask some of the crypto bulls out there, they're saying that you watch, 2026 is going to be the year that banks actually start innovating themselves. Perhaps part of this sort of story around enhancing their moat, that they're going to start innovating on the blockchain, that the traditional banks, the JP Morgans and Goldman Sachs of the world, they're going to be sort of leading the blockchain innovation, that they bring the real world assets and on tokenized real world assets, and start sort of seeing even some sort of a re-rating for these banks, because they're actually dealing with something very new and a lot bigger. Do you agree with that?
Yeah, I definitely do. So when you think about it, blockchain is simply a tool, it's a technology, and some will embrace it faster than others. Just like when internet first became mainstream technology, not everybody adopted it right away. Those who kind of sit back and didn't realize the potential of the technology became somebody like a Blockbuster, which ended up basically going bankrupt because they lost all their customers to somebody like a Netflix, who saw the potential of this technology and then innovated it and then eventually delivered a better service. So I think same thing is going to happen with the banking sector. Some will be faster than others in terms of adopting this technology, and then those that remain agile but I guess open-minded about this technology and embrace it, I think is going to come out as a winner.
So that's yet another positive element in the setup for crypto. And yet, the price action. So last year, every single asset class, I feel like, that they delivered positive returns. That's not what happened with crypto. I'm not going to ask you why that is, because there are just so many different theories out there. But one of the arguments that caught my attention is that some of the OG investors, the people who held on to, what is it, hodled their Bitcoin for the last how many years? 15 years.
Yes.
Some of them left. Do we need to worry about that particular layer?
Yeah, I think we need a bit of clarification on that particular narrative,
Okay.
because I know it went viral and everybody kind of went for it. But when you actually look at the data on chain, it shows that a lot of the selling was actually coming from year 2020, 21, 22, 23 vintage. Not necessarily what somebody that you would call OG, in my opinion.
Yeah.
If I call somebody OG, then it has to be at least from like
15 years
that's
ago?
right, yeah. So it was relatively recent buyers who ended up selling last year.
I see.
And so I don't think there's too much to worry about it. Also, I think another thing is what happened last year, I think, was if you look at the Bitcoin price, it actually performed in line with the gold up until October 10th, which is the day when there's a huge, record amount of liquidations. And that actually forced many crypto exchanges to take over the leveraged position from traders. And they were forced to unwind that in the remainder of last year. And so that's when actually start to see the performance gap between BTC and gold. Now there are some reasons to believe that unwinding is almost done, and I think that's one of the reasons why Bitcoin has kind of done better this year, so far better than gold and better than tech stocks. So I think the OG selling, I think that narrative was a little bit overdone. I think.
But what more endorsement does the industry need right now? I mean, I know that we started off with the Clarity Act, and I feel like some in the industry are holding their breath for this because it will bring in very sort of old-fashioned thinking institutions that can actually help convince them to come into crypto investing. But I mean, the Trump administration, himself surrounding himself with crypto czar and crypto cheerleaders, and his sons invested in this space. I mean, what do you think is happening? I mean, so I even talked to a crypto guy getting very jealous with the rally in gold. I think that says a lot about what's going on in the space.
Right. I think the crypto guy. I think you should be maybe a little bit more patient. I think. And I think what's happening with the industry is this Clarity Act is a huge bill. This is something. It's like a constitution for crypto industry, and it will shape the way that this emerging industry evolve for many, many decades to come. So of course, every stakeholders is going to fight to get the best deal out of it. That includes not just the crypto players, but also the banks as well, because they'll be impacted by this bill. So I think all stakeholders are right now using every negotiation tactic in their book to get the most favorable outcome for themselves. And I think the clip that you showed, the Coinbase pulling publicly withdrawing the support for this bill is a prime example of that negotiation tactic. So I think we need to be a little bit patient. It's a big bill. It's going to go through a lot of, back and forth. So if you keep that in mind, I think maybe that'll help you become a little bit more patient.
Martin?
Hey, Peter, great to see you. A belated Happy New Year. Always a pleasure having you on the show. Listen, I've got, I want to see whether I can get you to help us connect crypto with what's going on, our big story, that is what's going on over in Greenland. President Trump's attempt to try and control Greenland. And this is sort of a crypto bro related question, so bear with me here. If you take a step back and ask yourself, look, why does the U.S. want control of Greenland? Is it the fish? Probably not. Is it so they can keep track of Russian nuclear submarines? More probable. Is it so they can keep track of Russian ICBMs on the Kola Peninsula? Even more probable. The official reason that we're given to understand is, look, it's to do with what's under the ice and the snow and the tundra there. It's the critical minerals and uranium, etc. But I'm also wondering, you know, if the U.S. were to control Greenland, this is a big if, right? Wouldn't Greenland, because, you know, of its Arctic conditions, the geothermal power, etc., also potentially be a great place for Bitcoin mining? And I'm wondering whether or not that would also make what's known as the hash rate resilience even more resilient.
That's a very interesting angle, actually. I think you're on the right track. I mean, so Bitcoin, the way that Bitcoin works is always going to force miners to look for the best source of energy. And if there's and also another, like, you know, the good thing, like the beauty of the Bitcoin network is that the you know, they can utilize a stranded energy. When you think about it, these energies, when they are created, you know, it costs a lot to transport to another area. But the beauty of a Bitcoin is that it can utilize even those stranded energies that is not otherwise very profitable to distribute elsewhere. So yeah, I think that's still there's definitely that potential. I have not seen any studies on whether you know, the nature of the energy they can potentially access around Greenland is something that is like suitable for that type of operation. But I think it's definitely something to look into.
Absolutely, yeah, and I'd be surprised if you weren't already crunching some of the numbers, because just, what, 4 or 5 years ago, in terms of mining, right, China dominated 65-75%, then they went and banned everything, and then it sort of shifted in the U.S.'s favor. The U.S. right now is at about, I think, 30-40% or so. If the U.S. were able to add Greenland, right, it would be extremely advantageous, not just in terms of crypto, but also, I mean, geopolitically as well, right? And there are connections here if we are indeed in an economic war with China.
Yeah, that's right. I mean, I think the Trump has emphasized that they want all the Bitcoin mining operation to, you know, migrate to the U.S. as much as possible. So yeah, I mean, that's definitely I think it would be beneficial for that type of initiative.
But, I mean, there are not that many Bitcoins left to mine to begin with. I mean, we're talking about highly sort of mature industry, let's call it that. I don't want to say struggling, but it's tight, you know, for the industry. Yeah. So I don't think there is a lot of,
Yes, sir. Incrementally, yeah, there's not that many Bitcoins left additionally, but I think it's more about, even if you don't get as much Bitcoin mined as before, you know, when you're mining it, actually, your control, that's the control that you have over the network.
Yeah.
So I think there's still strategic value to you know, being the biggest provider of hash power to the Bitcoin network.
What is going to be the biggest risk to the crypto space? Or on the other, you know, if you flip the coin, what is the biggest driver for a crypto space this year? Is it liquidity? Is it President Trump? Midterm elections?
Yeah, I think if over the long run, I think this Clarity Act is going to have a huge impact. And so that impact is not just going to be this year, but I think for many, many years. And I think the midterm election is going to play a big role here, because the crypto industry has a massive political war chest exceeding $100 million. So the lawmakers that are seeking re-election in November have every incentive to deliver outcome that is favorable for the crypto industry.
Yeah.
So yeah, I think the midterm Clarity Act, I think Trump's policy in the meanwhile, all of that, I think, is going to play a very important role this
A
year.
lot of tech entrepreneurs seem to have gotten what they were looking for, perhaps, in this AI push. Maybe it's a crypto's turn. I think that could be the argument coming from that industry. Peter, let's leave it there for now. But of course, to be continued. That was Peter Chung, of course, from Presto Research, joining us live. Squawk is back in just a few minutes.